All right. I think clarifying this thing about DRS will help you explain to your haters what you do think. Let's say there are four possible outcomes of this saga. We MOASS sooner or later, sell for millions, and build a new world order. Okay. We MOASS, but all brokers explode one after another, and we lose our shares outside of CS. Okay. GME doesn't MOASS and becomes a simple long term play as the company is clearly undervalued. Okay. The government decides to put a stop to the saga to protect the economy and all and give us all fixed price per share. Either CS or broker shares doesn't matter. They close everything and we get what we can. Okay. What would be the reason to not have like 90% of your shares in CS as insurance against like 3 out of 4 scenarios? Thanks for all you do and the wrinkles you distribute. Okay. So one, we MOASS sooner for later, sell for millions, and build a new world order. Um, I'm not ultra confident in CS's ability to sell my shares for millions of dollars. At least not with the order execution that I would want during a short squeeze. I realize that yes, you can sell from CS. Their divestment between brokers could actually mean that you have better luck selling. But I don't trust them to facilitate that. Personally, I'm not saying other people shouldn't do your research. I've traded high volatility events before. That's why I have my shares in multiple brokerages, because they go down. And I don't expect CS to be any different than, Fidelity or Vanguard or Schwab or IBKR in that regard, right? Two, we MOASS, but all brokers explode one after another, and we lose all of our shares outside of CS. If all the brokerages explode, there is no market to trade those shares in, so having them in CS doesn't really matter to me. If the entire market crashes and everything is valueless, and the Fed has to enact like austerity measures in order to help recover our economy, no one's buying your fucking GameStop shares, no matter where you have them. Jimmy doesn't MOASS and becomes a simple long-term play as the company is clearly undervalued. I mean, currently valued under, but fairly. As soon as they start rolling out some more long-term plans, yes, the value of that can increase, especially as it becomes a digital and e-commerce company and starts to move away from consumer discretionary. That hasn't happened yet, but give it a couple years. It takes time for those kinds of transitions. Sure, if you it's a more direct form of investment by registering your shares in that scenario, and you're just a long-term holder. But at that point, I really don't care where I have my shares. It doesn't matter to me, but it could matter to you. If it does, then obviously computer share is a way, and something you should consider. Four, the government decides to put a stop to the saga to protect the economy, give us all a fixed price for a share. Yeah, then it doesn't matter where you have your shares. They'll just pay out a flat rate per share owned. That's it. And I know CS doesn't have any majority shareholder, right? But they have lots of large shareholders that make up majorities. And if the market crashes, who's to say that those people aren't going to sell all of their shares in computer share? Right? Is it as a publicly traded company at the same level of risk to a market crash as anyone else? Is that illogical to think that? I don't think so. I think as a publicly traded company, they're at the same risk as any other publicly traded company of economic collapse.